Welcome to Click and Cash. Today we're diving into the exciting world of Bitcoin and exploring the pros and cons of its bull market resurgence. Look, Bitcoin's been on a wild ride lately, and everyone's talking about it. Some people are saying it's the future of finance, while others are saying it's a bubble that's about to burst. So what's the real deal? Well, that's what we're here to find out. In this video, we'll take a balanced look at both sides of the equation, exploring the potential benefits and risks of investing in Bitcoin during a bull market. We'll break down complex concepts into easy-to-understand terms so you can make informed decisions about your own investments. Before we proceed, please subscribe and share. Whether you're a seasoned crypto enthusiast or just starting out, this video is for you. All right, let's talk about the potential upsides of a Bitcoin bull market. First and foremost, it creates incredible investment opportunities. When Bitcoin's price is on the rise, early investors stand to make significant returns. We've seen this time and time again in the crypto world. Remember back in 2017 when Bitcoin hit almost $20,000? Those who got in early and rode the wave up saw their investments skyrocket. Of course, past performance is never a guarantee of future results, but it does highlight the potential for wealth creation during a bull market. And look, I'm not saying you need to become a millionaire overnight. Even smaller, strategic investments can grow significantly in value when Bitcoin is in high demand. The key is to do your research, understand the risks involved, and never invest more than you can afford to lose. Remember, this is a volatile market, and there are no guarantees. Another exciting aspect of this Bitcoin bull market is the increasing participation of institutional investors. We're talking about major corporations, hedge funds, and even some governments getting in on the action. This is a huge deal for Bitcoin's legitimacy and stability. For years, Bitcoin was seen as this fringe asset, something only tech geeks and libertarians were interested in. But now, with big players like Tesla, MicroStrategy, and Square investing millions, even billions of dollars into Bitcoin, it's gaining mainstream acceptance. This institutional adoption brings with it a level of credibility and infrastructure that was previously lacking in the crypto space. It's like Bitcoin is finally graduating from college and getting a real job, and with more institutional money flowing into the market, we could see even greater price appreciation in the future. Bull markets aren't just about rising prices. They also fuel innovation and development within the blockchain space. When there's more money flowing into the ecosystem, it attracts talented developers and entrepreneurs who are eager to build the next big thing. We're seeing this right now with the explosion of decentralized finance, or DeFi. DeFi platforms are using blockchain technology to create a more open and accessible financial system, offering services like lending, borrowing, and trading without the need for traditional intermediaries. And it's not just DeFi. The entire blockchain industry is buzzing with activity, from non-fungible tokens, NFTs, to supply chain management solutions. This surge in innovation is creating new opportunities for investors and entrepreneurs alike, and it's all thanks in part to the excitement and capital generated by the Bitcoin bull market. Positive sentiment. Let's be real, when Bitcoin's price is going up, everyone's happy. Okay, maybe not everyone, but you get the idea. A bull market creates a sense of optimism and excitement that's contagious. Suddenly, everyone's talking about Bitcoin, from your Uber driver to your grandma. This positive sentiment can lead to broader adoption as more people become interested in learning about and investing in cryptocurrency. It's a snowball effect. As more people buy Bitcoin, the price goes up, which attracts even more buyers, and so on. This positive feedback loop can be incredibly powerful, driving the market to new highs. But it's important to remember that sentiment can change quickly, and what goes up can also come down. Volatility risks. Now let's talk about the other side of the coin, the potential downsides of a Bitcoin bull market. One of the biggest risks is volatility. Bitcoin's price is notoriously unpredictable, capable of swinging wildly in both directions. While this volatility can create opportunities for profit, it can also lead to significant losses, especially for those who are new to the market or invest without a solid understanding of the risks involved. Imagine buying Bitcoin at $60,000, only to see it crash down to $30,000 a few weeks later. That's a 50% loss, and it's not uncommon in the world of cryptocurrency. That's why it's crucial to only invest what you can afford to lose and to have a long-term perspective. Don't let fear of missing out or FOMO drive your investment decisions. Another risk to watch out for is over-optimism. When Bitcoin is on a roll, it's easy to get caught up in the hype and start believing that the price will go up forever. This can lead to speculative bubbles, where prices become detached from underlying fundamentals. Remember the dot-com bubble of the late 1990s? Investors poured money into internet companies, many of which had no real business model, simply because they believed the internet was the future. And while the internet did revolutionize the world, many of those companies went bust when the bubble burst. The same thing could happen with Bitcoin. If too many people buy in based solely on speculation and hype, it could create an unsustainable bubble that eventually pops, leading to a painful market correction. As Bitcoin and other cryptocurrencies gain mainstream adoption, they're attracting increased scrutiny from regulators around the world. Governments are grappling with how to regulate this new asset class, and there's a risk that they could implement policies that stifle innovation and hinder market growth. For example, we've already seen China crack down on cryptocurrency mining and trading. Other countries could follow suit, creating uncertainty and volatility in the market. It's important to stay informed about regulatory developments and to be prepared for potential changes in the legal landscape. Remember, Bitcoin operates in a decentralized manner, but it still exists within the broader financial system, which is subject to government regulations. Finally, let's address the elephant in the room. Bitcoin's environmental impact. Bitcoin mining, the process by which new Bitcoins are created and transactions are verified, requires a significant amount of energy. In fact, Bitcoin's energy consumption rivals that of entire countries, which has raised concerns about its sustainability and contribution to climate change. This has led to criticism from environmental groups and some investors, who argue that Bitcoin's environmental costs outweigh its potential benefits. While there are efforts underway to make Bitcoin mining more energy efficient, such as using renewable energy sources, it remains a significant concern for some. It's important to be aware of these concerns and to consider the environmental impact when making investment decisions. Thanks for watching. We've covered a lot of ground today, from the potential investment opportunities and technological advancements to the risks of volatility, over-optimism, regulatory challenges, and environmental concerns. Ultimately, the decision of whether or not to invest in Bitcoin is a personal one. There's no right or wrong answer, and it's essential to weigh the potential rewards against the risks based on your own financial situation, risk tolerance, and investment goals. If you found this video helpful, don't forget to like, share, and subscribe for more insights into financial independence. Let us know in the comments what you think about the Bitcoin bull market resurgence.